because you see that cash balance there, just north of $30 million at the end of last quarter, and you see there's debt to be repaid, and you also see they've got to keep paying money right now to pay employees, keep the lights on, but you're not getting anything in the door. So it just puts a bit of pressure on that balance sheet. And the question we have is, how do they plug that pressure? Can they get a bit of a funding solution from Trafigura, or do they have to hit the equity markets and raise a bit of money to get them through?
So just because they're not producing, that means no money's coming in the door. But exactly like you said, they've still got to pay their people. They'll have reduced costs on stuff like diesel while things aren't running, but a lot of the costs will still be going out the door. Breathe.
G'day, Money Miners. 14th of June, Wednesday. Welcome to the show. Geez, AVZ, isn't that good for some views, JD Trav? Lady, the punters love a good AVZ chat from yesterday.
And the bots might be on that one too.
You stopped getting harassed yet, JD, or is it still happening?
Yeah, I think they might have thought the take was a bit more balanced. What do you reckon?
Oh, I thought we showed both sides in this one.
I'll have to check.
No one's ever happy though.
I'll have to check the
Is there both
Twitter
sides
account.
or 6 sides?
It's a good point.
There's some bloody sides.
Yeah,
Actually, I said I revisited my one I did last year on the initial AVZ. I probably should have listened to it before the episode.
Yeah, I only actually checked the company Twitter account. So the personal one got a fair bit of stick last time. So I'll check after this and see how we're going.
Look at us go. Right, yeah, head back and listen to the AVZ chat, everyone. A bit of an update on where they're at and with the Monono Lithium project and what's to come. There's still plenty more to come. This will keep us give us content for a decade, I'd say. Right, news of the day, lads. Delta Lithium. Strategic placement. That's the old red dirt.
Wait, mate, aren't you going to tease what the deep dive is up front?
Nah, keep them guessing. Keep them guessing. It's a nickel stock.
It was a great announcement for Delta, wasn't it?
Well, because I had the big rise the other week, so there was a lot of market interest and a bit of word on the decline. There was a lot of off-market interest as well. So yeah, they went up, shot up about 22% in one day on no news.
Yeah, from roughly sort of 50 cents to almost 70 cents, didn't they?
Yeah, well, so Idemitsu Australia has invested $46.5 million at a 7.5% premium to the 10-day VWAP. So look, 7.5% premium, but consider they went up 20% a couple of weeks ago as well. So they've issued them 15% worth of the company in shares. So that's the max they can do without shareholder approval. So they're a subsidiary of the parent Japanese energy business. So Delta looking strong, $90 million in cash, lads, and additional drill results and from Unithara and Mount Ida projects as well. So
yeah, love seeing an investment at a premium for a company, don't we?
Yeah, it looks a lot like the Leo one that they did with Ganfeng, super recently, right? Launch your placement, do it all to the one strategic partner at a premium. It's a much more favourable equity market strategy than what we saw with Sayona.
Yeah, and also interesting to see this is with a Japanese partner. So obviously a lot of the world's critical resources going to China, so it might be quite strategic in that sense too.
Right, Trav, there's no better man to take off the next bit of news than yourself, mate. This is a little soft spot, this commodity, this little sector for you. Take it away for Kalium.
Oh, potash.
Oh, you love it, don't you?
We do love it, mate. I've been waiting for this one. Kalium, it was over a week ago that I talked about them on the show because they'd gone into a trading halt and then the trading halt turned into a suspension. And it was all pending an operational update. Well, we've finally gotten that operational update and mate, it's not looking like it's good news. They've revealed now to the market that their SOP, which is sulfate of potash production, has been 2,000 tonnes for the last 2 months. And this is for their Biondi sulfate of potash mine, which is about 160 kilometres southeast of Newman. So 2,000 tonnes over the last 2 months. If you just annualize that, you get 12,000 tonnes per annum. That's a long way off their target of 60,000 tonnes per annum by July that they stated in their March quarterly.
Yeah, I think if you jump on the company's website as well, the target was for 100,000 tonnes.
Mate, it's gone down and down and down. Like it's like restated down to 9 and then restated down to 60. Now in this latest one, it's restated down to 55 by December. So like the dates and the steady state production keep going lower and lower.
Yeah.
So you went over it last week, Trav. What's the big drivers of why they're not hitting their nameplate?
There'd be a lot in my mind. Not least of which, just think about the OPEX of this operation. You can pretty like, and I'll bring up some of these numbers in a moment, but I can, in my mind, I think the OPEX is like extremely high, and also your production of potassium bearing salts is not at all what the studies were saying. And I think the other issue with these projects is that the feedback loop, the time it takes to get a bit of feedback and then make a change and then actually see it in your production flow, can be as long as 3 years, just by virtue of the chemistry in these operations. So you're pretty limited in your ability to actually improve things and see that improvement over time as well.
So it's in the processing side that is the issue, is it?
Big time.
So it's just so different to your normal hard rock mining. For instance, the issues we saw at Mincor earlier this year, you can tell pretty soon after the fact that something's going wrong, they need to address it. It can take years with these sort of SOP type plays.
And why is that?
Well, the way these things are modelled, like you see that 60,000 tonne per annum target, right? Or 55, whatever, or 100. The way that number is modelled is this thing called a steady state pond model. And Maddie, there's no such thing as a steady state in the environment. There's rainfall, there's seepage, there's a whole bunch of factors that don't make any such thing. And the dynamics matter a lot in this. You do model it with a dynamic pond model as well, but there's a lot of variability that happens, and some assumptions make a huge difference in it all. But yeah, I mean, like they went into it. So when they went into suspension just over a week ago, we also saw one of their directors resign. In this case, that director, it was Mark Sawyer, and he was sitting on the board as the nominee for Greenstone Resources Fund. So Greenstone, they've tipped in about $60 million on my numbers over the last 3 years to A, help fund the project, and then B, keep tipping in their pro rata equity as ramp up issues took their grip. Greenstone was there as a 20%, strategic cornerstone. So when I saw Mark Sawyer, who was a co-founder of Greenstone, step off the board, despite that huge, dollar investment in Kalium, it looked to me like, he clearly doesn't see that equity being worth anything anymore. And today they've come out saying that they've appointed Argonaut as a financial advisor to run a strategic process. That means sale process in my mind. That additional funding is going to be required over the next 2 financial years during ramp up. And in my mind, this ramp up's been going on for 3 years already. So it's a never ending ramp up on this one. And that they're going to continue to remain in suspension during this process.
So what's the balance sheet looking like there now, Trev?
So they got $201 million debt outstanding. And yeah, I know. And it keeps going up. $5 billion more coming in because the lenders have to keep funding things. And I imagine
they're making Red 5 look good.
What was the cash position at the last quarterly?
Cash really slim. I thought it was like 12 million at the end of the quarterly. Keep in mind they've drawn down a bit more of debt. So, but I think the OPEX is super high. Keeping the operation going is costing a lot of money. You can see one quote in the quarterly that the indicative harvest for the combined months of April and May was approximately 22,000 tonnes of potassium bearing salts and 154,000 tonnes of waste salt. So that's a lot of waste salt you have to harvest, right? And like the OPEX associated with that, like these waste salts is just halite or sodium chloride, right? That just precipitates, and you have to use a salt harvester and load it up into trucks and haul it away. That's a lot of waste to your potassium bearing salts there, and that's Yeah,
and that 200 million odd in debt. Do we know who the lenders are there?
Hey, and like that's the thing, right? Like the taxpayer's on the hook for a lot of this. So like the NAIF is in there. You've got KfW, Lithium. So and what we see now is like there's a strategic process. I can't imagine this stock ever trading again. I think it was $20 million market cap at the time it went into suspension, but that debt is going to be super hard to see, your lenders get 100 cents on the dollar in any process here.
Yeah, unfortunately, it's not the first name in this sector that we've seen go through such a process. So,
well, the bank, you'd think the lenders would be absolutely shitting themselves when you got that much owing and possibly a project that does not appear to work in its current state.
And needs more funding to, get a potentially work.
So you could nearly attribute zero value to it at the moment.
And think of the lenders are also like, there's a rehab liability that's associated with all of this too. So you've just,
I think the writing's on the wall with this one, and we should move on to something a bit more cheery. There was some news at OreCorp, Matty. What did we see there?
Big Goyder, Timmy Goyder. His holding in OreCorp's moved up from 5 to 6%, so he's got about 24 million shares now. So we're still waiting on. So is that 24 million he bought today, or is up to 24 million?
From 20 million shares up to 24 that he now holds. So really looking to see that funding come together for the project in Tanzania, aren't we? That's the big kicker, and then I think most analysts will have factored in roughly 2 years construction. So hopefully if things go smoothly, we can see them by 2026 starting to produce gold in Tanzania.
Can an individual just fund a project? Organisations usually fund it, but can they say Nyanzaga is going to be funded by Tim Goyder because he's got...
He's a wealthy man, but it's still quite a bit
wealthy on scrip.
Exactly. I don't think he wants to sell too much of that Liontown, and it's quite a hefty project build that OreCorp is facing. So
it might make him an honorary citizen if he does though.
Yeah,
given the free carried interest the government gets.
I'll definitely flick the chalice off and keep the Liontown, you'd think. But Predictive Discovery, PDI, so they're in a trading halt. Now this was requested by the ASX after high trading volume yesterday. Now, Predictive Discovery, so the ASX they pause them. Predictive Discovery then have to respond. So they've got to respond to the price volume query and have to provide an exploration update inclusive of any unannounced assay results.
Interesting.
Specifically we saw them requested by the ASX.
Yeah, we saw them raise money just last week. So it'd be interesting to see what they...
So you would think that based on that trading volume, there is some positive news coming if there's unannounced assay results. So possibly a good thing. There was high volume and it went up about, I think it was 10 and a bit percent. Come back down yesterday, Arby. So IGO, they've awarded the Cosmos electrification study to Parenti and ABB. So obviously Barminco are within Parenti. They've got the underground contract at that mine and all of IGO's mines. So this study is for the full electrification of the Cosmos underground nickel project. So that's also known as Odysseus. People that don't know. Now, electrification, lads, a lot of studies going on. Studies sounds like they're on the front foot. But I guess my concern is who is going to take the first leap to implement this full electrification, because it comes back to the equipment manufacturers, the OEMs. Can they provide these electric fleet for an underground mine? So your OEMs, that's your Sandvix, Epirocs, Cat. And will the mine owners and the contractors be willing to sacrifice production output in the short term to go full electric? Because I'm telling you now, when you're having to drop off, charge, recharge batteries on trucks and boggers throughout the shift, every shift, you can't expect the equivalent production output across the board. So,
mate, are you an optimist or a pessimist when it comes to underground electrification?
It depends in which aspect you look at it. I'm a optimist in the idea for this is the way we have to go, but a pessimist in terms of the uptake of it.
Just the practicality at the moment.
Well, there's the practicality, but like who is going to how's the market's going to react when companies start dropping their guidance because their production rates are lower because they've got a full electric fleet?
Yeah, it'd be fascinating to see.
The whole market aren't green investors. They want money.
Yeah, we'll see what this study comes out with. It'll be fascinating to see what the sort of
studies. There's shitloads of studies everywhere. Everyone's doing studies. Where's the actual electric mines? I think Canada's had a better uptake over there, but they're I don't think Australia has a lot more high pressure on production output, speed at which it goes. So, righto, the deep dive, lads. Oh, I like a bit of nickel's my new PNG.
This was the one nickel company you didn't talk about last time, Matty.
Yeah, I know. We forgot to mention it when we're talking about the whole thing because Panoramic just sell a concentrate to Trafigura. So
it's out of that hub, right? It's pretty far away.
It's in its own bloody hub in the middle of bloody nowhere. So Panoramic Resources, now they've had a negative operational update from their Savannah project in the Kimberley. So not good for them. Bloody, whether it's bad luck or things deteriorating on the plant, but look, they're down 10% on the day. So they're now capped at 180 mil. You can see the chart there. They've had a pretty gradual decline or hefty decline over the last 12 months. So look, we'll run through the operational side of things and then try and, I guess, get you boys to look at how this is going to impact them financially. So look, what's happened here, the company has flagged that the filter press pressure plate has a crack in it. So the filter press, that's used at the final step of the processing. So that's what it filters, everything that goes through the mill to go into the concentrate after the crushing, grinding, flotation and thickening. So
photos are pretty telling of this thing, weren't they?
Well, you look at it, it looks like, so they've, and they talk about this in an announcement, they noticed a crack before. You can see the photos we've got up here. So see a gut load of weld beads in the guts there. They put it back to work and then it got another crack. But this is an existing piece of the plant from, I think, 2004.
Yeah,
so
it looks like it's showing its age, doesn't it?
Yeah, so then like it's obviously the plant's been on care and maintenance up there in the hot and the cold, just sitting there, and then now it's been restarted. So
I love the wording in the announcement. An engineering solution was developed for the crack, but it just looks like welding is the engineering solution.
shitloads of welding. That is mining 101.
So they've said
there's numerous terms for it, but I won't say them on the show.
They've said they'll take about 2 weeks to restore this, and they'll be down for the next 2 weeks. And
so it sounds like they're doing a fix-it job on it, going to weld the crap out of it. And then so that'll be back in to action in 2 weeks. I don't know if they're just welding it. They're probably reinforcing it or something. But then they've take on the front foot with getting a new one engineered, manufactured, and that's going to be 4 to 6 weeks. That'll be sent up. So not good for them. We're going to go into it because we'll go into this mine specifically, the Savannah mine. It's one of those mines that everything, especially considering nickel price has gone down, it's one of those mines where everything really has to go right for it.
Yeah, absolutely.
To work.
So they've pulled guidance as well in today's announcement, and you might think this, they can still keep mining and stuff, but it has more implications because they're using the paste fill, aren't they, Matty, in the mining process?
Yeah, because once you turn the mill off, so the mill's going to be off for 2 weeks, then you can't produce paste because the tailings are the key ingredient in the paste along with cement. Not sure of their makeup of paste, but once that mill's down, that means you can't backfill underground stopes, and that would be holding up the successor stopes after that, and it has a flow and impact for the whole production schedule.
Yeah.
So that's a big factor as well, and they're not producing concentrate.
Don't mine sites have a critical parts spares list on them normally?
Oh, probably not for big items like this, possibly.
Right.
Maybe not, but things like this that can be refurbed, they have. But how many, you think if you've got a spare for every single piece on a mine site, that's a bloody big shed.
Yeah, but not every piece is critical that results in a, shut down.
Yeah. It's, can't comment on that one. It's tough one to analyse without being there.
So for those who haven't been following Savannah and Panoramic more broadly, they, like you said, they'd started, I think in 2004 is when this got into production, but they've actually been restarting since late 21. So they're on their way to ramping up to nameplate production. So we were sort of anticipating by FY24 that they'd be producing that the mill would be going at 950,000 tonnes per annum. And in their latest mine life study, they were looking to produce 9.4 thousand tonnes of nickel, 5,000 tonnes of copper, and 700 tonnes of cobalt annually.
Yeah, so you look at the graph here from like their guidance, future guidance, until 2026, they've still got a bit of capital to put in before the actual all-in costs get down. So, and I'll go through a lot of the ventilation stuff they've had to put in to get down to this Savannah North extension, but it doesn't look like, according to this, even though I think they were hoping to reach nameplate output capacity by this year, their cost was still going to be high while they were developing down deep. So
yeah, we'll get into
a lot of pressure on that.
We'll get into the costs more later, but Matty, why don't you just start unpacking what's really going on underground and at the mill for us?
Well, here's a bit of a schematic of, I guess, what this underground looks like. So this is pretty much they've found this Savannah North, which is a new ore body, which I've been told is bigger than the existing Savannah that was there, but it's looks pretty on this first long section. But then you look at the long section of the entire mine, it's 1 kilometre deep where it starts. So right down the bottom there of the main Savannah ore body is about 1 kilometre. Then this one starts along that. So you can see how, look at the size of it. It's massive, but it looks like if you look at the scale of that, it's probably going to about 1,700 metres. And this is what's in their mine plan. Only a small portion of, I think the mine plan is attributed to the remnant mining of the existing Savannah ore body. So
up in the Kimberley.
Yeah, so you look at where it's up near Argyle. So you've got obviously the issues of heat. So when you're mining at depth and with heat, because when you've got a high wet bulb temperature coming in all your ventilation intakes in your portal, you can't really cool it down unless you can't cool it down unless you've got chilling. So if you've got high temperature on the surface, it's even going to be hotter underground. So looking like you look at the ventilation circuit, because they mentioned in their quarterly when they come out in April, they had delays to the development in the Savannah extension down the bottom there. So if you look at, we've got that long section schematic up at the moment. See those red lines? There's got all those little red lines going up the mine. You got that big long green line coming in. So that'd be a fresh air intake. That's the ventilation getting sucked from the surface, coming underground. And then those red lines are the return air. So that's where it goes back up to the surface. So that's called the ventilation circuit. So what happened in the April quarter, they said they had a blockage in one of the vent circuits. So that prevented that Savannah extension development. So that means either the walls have actually caved in and the ground's failed and actually blocked that big return airway, which is, it's usually like a 4x4 big hole going up level to level. That's what those little red lines are. So once you block one, you block the whole circuit. So that means the air can't suck through and you can't ventilate underground. So that's what happens there.
And that means nobody can be down there. Nothing's happening.
No. Well, you don't have enough. You got limited. It mightn't have been fully blocked. It might have just been partially blocked, which obviously affects the flow, but it means you can't. You have limitations on your trucking capacity. The heat rises, so it's tougher on all the operators. So, but you just look at what the capital that would have been put in to get to this Savannah North extension. So say that big green line going down, that's obviously that is a massive raise bore that's been put in from the surface a kilometre long to ventilate the underground. So that's big capital there just to get down there. You can't just really keep going when you've got two mining areas. You need additional ventilation capacity. So there's obviously, they've sunk a lot of capital into to get that going. And then you just look at that Savannah North extension. It's a big ore body, but you're starting from 1 kilometre deep.
Which means high cost, right?
Well, it's high cost and it's efficiency as well. So you take off, there's an extra half an hour each way to get down, just to get the workers down there underground, because there's no ventilation, there's no shaft or anything you can ride down in. You've got to drive a ute the whole way down. So if you're mining at 200 metres deep, you get to work at 6 o'clock, whereas these guys might only get to work at 6:30, but then they've got to leave half an hour early as well to get up so they can do all the blasting. So you're losing efficiencies there. You obviously then comes in the trucking, issues with trucking and getting it out. Same as Gwalia. Gwalia is 1,800. Their biggest thing is the haulage, trying to get the dirt out of the hole in amongst everything else. So,
but different to Gwalia, it's not like it's stellar grade in this instance, is it?
Nah, well they do. Look, and you boys can go over that. Like the nickel grade isn't a standout, but they do get those byproduct credits from the copper and the cobalt. It is a bit of a sweetener. I think it takes a few bucks off their cash cost.
Yeah, although we still see them pretty firmly in that fourth quartile of costs, which it's pretty far from ideal.
Yeah, exactly. And as I mentioned before, it's one of those mines that everything really needs to go right all the time, similar to King of the Hill with Red 5 by the sounds. Like everything needs to be going and humming, and any little setback like this can have a big detriment on the project. There's just not much room for flexibility. So, and as we talked about, now that the mill's down, the paste won't be going down there. So that's another another big issue because even just 2 weeks without paste can really set everything back. It's not just making the next stope available; it's even just getting to drill the next stope, and it's
just pushes the whole schedule back.
That 2 weeks might cost you 4 or 6 weeks, something. So it's
not good. Should we get into the financial side of things?
Go boys, this is your cup of tea because they gave an update on their guidance. They've dropped their guidance and they've increased their cash costs, and their C1 cash costs. You'll go into that, JD, is actually higher than today's price of nickel itself.
Yeah, it's not a good spot to be in. So the previous guidance for FY23 on the main product, nickel, was between 6.6 thousand tonnes and 7.1 thousand tonnes of nickel. But yeah, like you said, that's been dropped. And the previous guidance for C1 costs, so this is Aussie dollar per pound, was between $7.30 and $8.30. Now in today's announcement, they've come out and said that's going to be between $13 and $13.50 per pound. So just for reference, the current nickel price, we looked at that earlier today, Maddie, that was floating, I think,
$13.84 a pound. So pretty much their C1 cash cost. So JD, go into what C1 cash cost is. Yeah, so that is not all the cost.
Exactly. So just really simply, the C1 costs that a mining company has are the direct costs involved in, producing a unit of metal, in this case, a pound of nickel. So you'll have the all-in sustaining cost will be higher than that. And then again, the all-in cost will be even higher than that. So you can look in the last quarterly, the company, they show their numbers for the costs there, and the margin of additional costs over that C1 is between $3 and $4 in each of the last couple quarters. So if you just back of the envelope, do a same sort of thing, chuck on another $3 or $4 over the $13.50, the higher end of guidance, you're looking at around $17 per pound of nickel produced.
So what are your main things that aren't included in C1? So obviously CapEx, so capital expenditure.
CapEx will be the main thing that's not included in the C1 cost. So
exploration drilling, because grade control drilling is included in C1, isn't it?
Yeah, exactly. So to think of C1, you've got, like I said, the direct stuff, everything used in mining, everything used in processing, your local site G&A, freight, any sort of selling costs, and then they're netting off the byproduct credits they're getting. So in this case, they're netting off what they're getting for the copper and what they're getting for the cobalt off of that C1 cost.
And it's interesting because you look at that graph we looked at before, they're predicting future that their all-in costs are going to be around $8 per pound Australian. That's the all-in cost. That's including capital and everything.
Yeah.
And they're running just their operating costs, the C1, this month at 13. So
yeah, so they're really hoping things all come into a line once they're running at nameplate capacity in a year or so. So we'll sort of have to hold our breath and see how they go with that. So on the balance sheet side of things are looking
stretched.
Pretty interesting. So they've got two different types of debt facilities, both with Trafigura for combined at the last quarterly debt of US $41.4 million. So this is the prepayment loan facility and their revolving credit facility that they've both got with Trafigura, right?
Yeah, there's like a $30 million prepayment facility. A little bit of that's been repaid, not much, and then $15 million working capital facility, both at the same interest rate. They quote, they don't actually tell you what the margin is, but we just know it's, SOFR plus a margin. It's with Trafigura. We saw Trafigura come out the other day with a facility for Aurelia, and they had a margin of 6% on a portion of that. So
you're looking at 10% roughly?
I think 10 is okay. Yeah, if you assume SOFR right now is 5% plus a margin of 5%, gets you to 10% on their outstanding debt. That's $1.5 million in interest payments alone that they've got to make this quarter, add probably about $2 million in repayment on top of that. So there's $3.5 million that's going to be spent just servicing their debt this quarter.
Yeah, and they were at a sort of group cash position at March 31 of 32.5 million Aussie. Remember, we said that debt position was in US dollars.
Yeah.
So times that by roughly 1.5.
Yeah.
So it's not a great position. That revolving credit facility is due to be repaid at the end of the year, but
it's a bullet payment 31 December. But
yeah, that's already been pushed out, hasn't it?
It was pushed back once. I mean, revolving credit facilities, it's pretty typical for those to just keep
push it down the road,
revolving themselves in some ways.
What's SOFR again? Is that pretty much the cash rate plus a bit?
So far is the secured overnight funding financing rate. So it's when we're at uni, we always heard about LIBOR, but it's what's really replaced that. And right now it's a bit over 5% from the last time I checked.
So it usually tracks above what the cash rate is. Like it's always higher than what the cash rate is.
It's closer to what the US cash rate, the
US
Fed
cash
funds
rate.
rate is. Yeah. So it's a big global rate that a lot of, debt is denominated sort of priced in.
Yeah, big time.
Oh,
And
much the wiser. Cheers, lads.
like you look at the big question right now for this company is what is their interim working capital situation going to look like while operations are right now, not producing, not selling product, and also what's it going to look like? Is the ramp up a bit elongated? Are they going to have more pressure on the balance sheet over the next half year as well? Because you see that cash balance there, just north of $30 million at the end of last quarter, and you see there's debt to be repaid, and you also see they've got to keep paying money right now to pay employees, keep the lights on, but you're not getting anything in the door. So it just puts a bit of pressure on that balance sheet. And the question we have is, how do they plug that pressure? Can they get a bit of a funding solution from Trafigura, or do they have to hit the equity markets and raise a bit of money to get them through?
Yeah, exactly. You have to look at what that difference between their fixed and what their variable costs are. So just because they're not producing, that means no money's coming in the door. But exactly like you said, they've still got to pay their people. They'll have reduced costs on stuff like diesel while things aren't running, but a lot of the costs will still be going out the door. And we'll have to see. Hopefully they can be back up and running in 2 weeks' time and things are going smoothly again. But it's a sort of hold your breath kind of moment if you're a shareholder.
Yeah, you look at like Canaccord were modelling already a minimum cash balance throughout ramp up of $12 million. So you can see that things are going to be getting pretty skinny on their funding outcome here, and you wouldn't be surprised to see them have to plug that hole with equity. And if they have to go down that equity pathway, it kind of poses the question a little bit. Who invests in this one, JD? There's interesting shareholder mix there.
Yeah, one more comment on the cash position. So that had factored in, I believe, paying the bullet payment.
Canaccord's numbers, yeah.
But obviously hadn't factored in a mill shutdown. So onto the shareholders. So
who's stinging? Who's stinging at the moment on the register?
We were doing a bit of research on this, and it actually reminded us that IGO tried to take them out a few years ago, didn't they?
Yeah, mate.
And they're still on the register at 21%, roughly.
What a turnaround for IGO.
So they creeped up to 21, did they? Obviously.
They've held that stake for, yes, you're right. They would have creeped up incrementally from a 19.9
or something.
Exactly. They've held that stake for a long time. It's really interesting to think what their sort of strategic play is here. To be honest, I can't work it out.
I think they had an old strategy. I mean, like they had a big holding in New Century back in the day, and then they obviously sold that. And then
this would have been a relatively significant holding a long while ago.
Yeah.
But obviously they've done phenomenally well over the past few years.
Yeah.
So this, $35-40 million holding is not what it once was.
But then nickel today wouldn't be what they thought it was back when they were doing this. When they were doing that takeover, they weren't expecting nickel to be at $9 odd a pound. Today, they were expecting a big lift.
Yeah, I mean, I don't think it'd be the easiest position to sell out of either. That's another sort of thought, unless they were dribbling it out slowly over a long, long time.
It doesn't have big, insto appeal, this stock at all.
Yeah. So also on the register, we've got Zeta that they're sitting at about 13%. So they've got a few positions across the resources space. They hold a stake in Horizon Gold.
I think it was Zeta that were causing a bit of havoc when IGO, were trying to do their takeover of this company back in the day. Yeah.
Yeah. So I think IGO can send the guys at Zeta a bunch of flowers or something. And also Ausbil holding 6.5% of the stock. So
genuine insta, yeah.
If they were to have to do a raising, it'd be interesting to see, are these guys going to, take their pro rata?
Yeah, IGO is the interesting one for me. Do they take their pro rata? I mean, everything's got a price. I'm sure they'll get the equity away if they discount it appropriately. And there's a line of sight through to things being better, which there's a mine plan to support that. But I'd like what the IGO follow pro rata. I'd be skeptical. I don't know.
I'm with you there. I'd be skeptical too.
I was trying to find a link there. I didn't know if Panoramic still owned Land Frankie, which was, I think, down that way in Cal, but they sold that. So remember the Land Frankie nickel mine? That was their
Oh yeah, that was Black Mountain Metals.
Black Mountain
Private
Metals
equity group.
bought it off them.
Yeah.
So I was thinking, oh, well, IGA looking at land exploration at Land Frankie because that was obviously finished, but that's obviously not the case. It's not on Thingo's register. Right, next, boys.
That's a wrap.
That's a wrap.
Hey, we're still looking for a pub. No one's told us a pub.
Mate, I had a person call me and say he's got a shed and plenty of home brew if we need it. But it was noticed.
Yeah, I've had a few people
someone
say
tried to. Someone was bloody messaging me saying they can hook us up with one. They got mates that have them in Sydney. I'm like, well, we don't bloody live there.
Yeah.
So
all I've had is people tell us it's got to be in the CBD. They're not happy. You're suggesting the Paddo. They like the venue style, but they don't want to go to Mount Hawthorn for it.
Far out. How close to the CBD? You want to try living in friggin' Hammond Park, Coburn? Fuck's sake. Bloody, well, where's a good one? Let's spitball some things that would suit. Will give us an area that's not bloody loud. Mayfair's no good because it's too bloody every bastard's yelling and shit.
We'll bring at least 10 people to the pub for a beer, so there's a bit of a.
It's going to be bloody hundreds.
We might have to chuck this segment at the front of the show so we can get people listening in giving their suggestions.
Maybe the back bit of the Subi Hotel there. That'd be the go. The backyard bar, the back bar there. You can rent that out. It's bloody Swan.
That's 2 kilometres from the city.
Swan draft on tap.
Mm-hmm.
I'll be bloody shit-faced by the end of the live show. I'll be bloody... can't vape inside either. Righto, hoodaroo, everyone.
Hoodaroo.
So me and you tomorrow, JD.
It is, yeah. A lot of eye contact to be had.
Oh, yeah. I'm back on the desk.
Oh, looking forward to it.
Hoodaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.